moving to Jenny, you sold Organon, which I think you had sort of led us to believe you might
I was crystal clear.
in the near future, because the stock has just not worked. Certainly not year to date.
Right, not year to date.
And you bought, is it Vici Properties? Okay, Vici Properties.
Yep. So,
can you just take me through the trade?
Sure. So a couple months ago, we know Organon cut the dividend. The stock plunged. It was around 8. You guys were asking me why I wasn't selling it. And I said, look, the numbers were fine, but they just cut the dividend to repurpose it. So they've ostracized their entire dividend shareholder base. Now you need to see that change over. But because I'm not an algo robotic trading program, I don't need to do that today. Stock was trading at about 8. I sold it closer to 10. So, you always look at here and now today. No, I didn't want to keep holding it, but I knew the shares were oversold. So I waited patiently and got a pushing 25% bounce out of that. So that was a sell. And then separately, we added a company called Vici Properties, which is really cool. It is a triple net lease REIT where they own gaming and casino properties. They have 93 properties, 54 casinos. So they own things that we all know, like the Venetian and the Mandalay, MGM Grand. They also own 39 experiential properties that are like boleros and golf courses. I will tell you, this is one of the best management teams that I've met with. Just professional, thoughtful, sober, serious. They're incredible. They also have a 5.3% dividend yield. They have 3% FFO growth ahead. They have rent escalators that are tied to CPI. So as inflation picks up, maybe that's positive for them. Because they're triple net lease REIT, which means the tenants pay everything, right? All the improvements, taxes, the tenants, and because of the type of tenants they have, who are companies like MGM and Caesars, they have 100% occupancy. They had 100% occupancy at the worst of the pandemic. They had 100% rent payment collection at the worst of the pandemic. So as we go into, as you all know, an environment that I think is kind of sketchy, I look at this and I can say I'm getting 5.3% from the dividend. I should get 3-4% FFO growth. You combine those together, I should have a 9-10% annualized return. That works for me. I first looked at this company 2 years ago, kind of the same metrics ahead. It was pretty flat. But in that environment where I thought there was a lot more growth left out there, it wasn't compelling. Now, in what I think is a lower growth environment, it becomes much more compelling for the portfolio.
All right. And there's the stock, and we will follow it from here forward. Thank you very much for that.